We started the day up, then came roaring down in the last 10 minutes. We were up over 4% on the S&P, finished the day up barely 1% on the S&P. So what happened? Overnight, we got progress on the bill, on the big stimulus package, on the $1,000 that are apparently now going to be $1,200 checks to adults in the country, funding for small businesses to keep them alive if they keep people on payroll, all of that. And then in the last 10 minutes, right before we were about to close, Bernie Sanders comes out and says he doesn't want to vote for the bill. It has X problem with the $500 billion fund that's going to go to funding the businesses, and he doesn't want the millionaires and billionaires to have that money. It's really about businesses and keeping the workers on payroll. But whatever, Bernie Sanders. The real hiccup, though, he's one guy. But they need 60 votes to pass this thing. There's like 51, 52 Republicans. They're all going to vote for it. Each Democrat is very crucial. So obviously, I assume most of the Democrats are going to vote for it. But the fact that Bernie Sanders came out and said, no, it's not good. It's not good at all. It's not terrible. It's a risk for the market. So the market started selling off because they're like, whoa. But that's really the theme and the underlying philosophy I want you to adopt right now. Don't be afraid and don't say that, oh shit, I might miss out on this. I can't miss out on this rally. It's going to be gone. It's possible. Maybe we hit the bottom. But there's still a lot of negative headlines to come. So we got the stimulus package. It's probably going to be passed. But what now? Cases are getting worse. We don't have enough ventilators. A lot of people are going to start saying, all right, we got the stimulus package. Now what? Where's the good headlines? All that we're going to see for the next couple of days, more cases, bad unemployment numbers, and we haven't even seen earnings. So we saw Nike. Nike was very good. Made me very optimistic. I'm still optimistic on overall earnings versus what I thought was going to happen. Nike barely got hit in China. They won overall. So in Q1. So to see that, that's good. Now, what's going to happen with some companies like the cruise lines? Nobody knows how bad that is. The airlines, we can only assume. So that's the thing. We can only assume unemployment. We know unemployment's going to be bad. We know hotels are firing everyone. We know lots of restaurants are firing lots of people, and they're closed, which is why we need the stimulus package, which is now getting held up. So there are some headwinds ahead. So you should be nibbling. You shouldn't be eating chunks. You should be nibbling, taking small bits here and there, things that are at a good price. If something was up too much today, I hope you didn't buy it because it might be down good tomorrow, might be good down good Friday. We might get some negative headlines, and it might be down on Monday. So watch my Thursday video, last Thursday video. Friday, it's March the 19th. Friday we were down. Monday we were down. So I backtracked a little bit on that, and I said, maybe it isn't the bottom. I'm reiterating my original point and going back with trusting my gut. It's not a technical bottom I was calling. It's not a technical bottom I'm calling. It's a fundamental bottom. A lot has been factored into the market. Basically everything. Basically everything has been factored into the market. We know it's going to happen. We know unemployment's going to be bad. We know earnings aren't going to be as good. So we can only really go up, which means it's a fundamental bottom. Now, the day-to-day trading is gonna, I can't predict that. I don't trade, day trade like that. I invest. I find good companies with good balance sheets and good products, and I buy them. And I become a part owner in that company for the long term. Not 1 year, not 6 months, 3, 5 years, 10 years sometimes too. So that's the kind of philosophy you got to have if you want to win in this market. You look for the companies that are down 30 to 50% that you want to hold on to for the next 5 years or so, 3 to 5 years, whatever your investment horizon is. But I encourage you to extend that out. And you're going to be getting massive discounts on those companies. And the ones that you want to hold 5 years from now are the ones that are going to recover. Those are the ones that are going to do good. So look for those companies, buy them on down days when the prices are good. And you can even buy them when they're up. If the price is still good, just have the stomach to withstand 10% down. I have the stomach to withstand 10% down. I've been nibbling knowing I might lose again the next day under the assumption I'm going to win in the long term, and I don't want to miss out on that good price. It's a hedge against turning back up, because if you ask me, we've overshot the downturn. We factored in the worst case scenario, so there's only room to go up here, but in the short term, there's going to be choppy waters still. Choppy waters, up and down. So until tomorrow, peace.